Has anybody here ever heard of Jerry Norton? He's a big YouTube personality, great guy, fun guy, likes to climb rocks. He teaches newbies how to wholesale and flip. I started asking him questions. I'm like, Jerry, who do you think should start wholesaling? And I thought his answer would be everybody, because he would want to pitch what he's selling. And his answer was very interesting to me. So he doesn't think everybody should start wholesaling. Those who don't have a cash machine should start wholesaling. And he adamantly believes people without a cash machine should be running around wholesaling properties. It's low barrier to entry. If you're good at it, it's highly profitable. His other answer was very intriguing as well. Or anyone who is crazy, because it is an absolutely insane thing to do, to drive around all day and all the texting, all the stuff you got to do to be good at wholesaling. You got to be nuts. So then I'm like, Jerry, when should people start acquiring assets? Because he tells all his wholesalers, do not buy rentals. Absolutely not. Does that sound a little shocking to you guys, that people who wholesale real estate don't buy rentals? A good wholesaling coach will not allow a wholesaler to buy rentals. Does that sound counterintuitive? You should start acquiring assets when you've built a cash machine. People who wholesale do not have a cash machine. They should not be buying assets. This is my beef with the entire real estate education space, is they talk about making everybody a real estate investor. And that's not exactly a lie, but it's definitely not true. Occasionally, I am on Pardon the Disruption. Who has seen Pardon the Interruption on ESPN, right? So it's a mock of that show, except you got real estate guys discussing topics and talking shit to each other. Like, it is so much fun. I love it. When we're really talking smack to each other on this show, they'll be like, I'm a real estate investing coach. I'm like, no, you're not. I'm like, you are not coaching people to invest. This is a load of crap. Does this seem somewhat shocking to anybody? Like when you see the Instagram reel of, hey, I want to teach you how to invest in real estate. They're really teaching you to be a wholesaler. I want to be precise in our speech. So investing is parting with capital in the expectation of safety and principal and adequate return of capital in form of dividends, interest, or rent. Since the return of capital takes the form of periodic payments of interest or dividends, investing indicates an intention of being separated from the capital for an extended period of time. Extended period of time, that sounds like an infinite game, right? Not a finite game. Now, in that book, the guy lays out the definitions of trading. Trading is basically an activity in which someone, usually called a dealer or a wholesaler, makes a market in a given financial instrument. Traders try to extract a bid-ask spread from the market. So what's a wholesaler really trying to do? Like when I'm wholesaling, I never want to own the asset. I want to create a contract for a bid price of A, and I want to sell it for B, which is higher. I'm just trading paper at that time. I'm not investing. Does this make sense? Now, speculating in its simplest form is buying for resale rather than for use or income, as in the case of commodities, financial instruments, respectively. What's the real estate version of that? Wholesaling, you never buy. You're just creating a spread. Flipping, exactly. Flipping, not investing. So these are the three companies I do these three very different activities out of. So I buy STL, the wholesaling business. I'm trading, but I am not investing. You can make an argument that I'm investing in my team, but that's from a different discussion. When I take my construction team and flip a house for myself or to one of you guys, what am I doing? Not investing, right? 99% talks about wholesaling and flipping, not investing. Does that make anybody else angry? It aggravates me. Now, where I hold my rentals is joint ops properties. 110% all day long, I'm investing. Make sense? And so what Jerry Norton said about you don't start acquiring assets until you have a cash machine, I had 120 poorly managed lease option rentals. And I'm like, hey, cash flow greater than expenses, I'm done. Medley's like, what do you do all day? How much debt you in? I was like, about $5 million. He broke down my business. Sure, I was Robert Kiyosaki wealthy, cash flow greater than expenses. But then he showed me all the holes in my game. And he's like, bro, you are way too much in debt and way too young not to have an active income. And he said, hey, if you want this passive income you speak of, passive income comes after hyperactive active income. It's the best lesson he gave. I would have gotten destroyed during COVID if I didn't find a cash machine. So I needed Jerry Norton as a new friend. I needed his thinking to line up as a new mentor. So then I'm like, Jerry, well, how do you define a cash machine? He's like, a lifestyle that you enjoy, that you can save 20% a year, or somebody who's making around $200K a year. He's like, those people have a cash machine. Who here has gotten paid in the last 2 weeks? Raise your hand. Keep your hand up if you got paid the 2 weeks before that, and the 2 weeks before that, and the 2 weeks before that. All right, nobody's putting their hand down. Keep your hands up if you have a cash machine. Lana, you're a professor at an accredited university. You have a cash machine. Who's gotten paid in the last 2 weeks? Who has a cash machine? You're a federal employee.
That's the gravy. He put his hand down because he has his gravy train. He doesn't have a cash machine. His
employer has to provide zero service and can take from people. You better have kept your hand up. You're a doctor. Bobby came up on stage and gave you what an average day of a wholesaler looks like. Remember, you have to be crazy. Bobby is a little bit crazy. That's what I love about him. I'm a little bit crazy. So when one of our acquisition managers says they're going on vacation, like a lot of owners of companies would be like, son of a bitch, I got to work harder. I love it when my acquisition managers go on vacation because then I get to go on appointments again. Like the last time I went on an appointment was right before Christmas. So Bobby went on Christmas break and I was like, yes. And then my kids they don't get to go on the appointments with me, but the kids will stay in the car. And if the house is vacant, they love going in there. 2 days before Christmas, I had a great meeting with the seller and then I got a deal. I got the contract, and by the end of the day, it was already under contract to be a Berkey, but I was so excited. It felt like the first time I got a contract. And like, I'll never retire. I might step down as owner of the business, but I will still go on appointments because I love it, because it's just so much fun. And then, sure, can I go teach wholesaling? It's a snooze fest. It's boring. I don't feel called to do that. It doesn't seem like an optimized daily formula for an optimized daily experience. Me and my team, we want to work with people who have cash machines. We want to help you guys get an infinite return on their time and their cash machine. This is why we show people how to do creative deals and how to raise money. We're the one-stop shop where if you want to get educated and learn how to invest, we do in cash flow tactics. If you want to flip houses, you need a construction team, we got Black Knight for you. You need long-term management, we do it, and then we go wholesale and find deals. That's where this part of the university is going. Here's what I think a lot of you guys in this room don't know. If you have a cash machine and a solid wealth pyramid, you're already at the party. Everybody else you see on Instagram, they're not there yet. Luckily, I just happened to be besties with two guys that said, hey, dumbass, make sure you get a wealth pyramid as you build this business. And so most business owners don't have this wealth pyramid. And then I hear a lot of people like, oh, I want to quit my job and I want to buy houses. And I'm like, that doesn't make any sense. If you let go of your cash machine, you are putting your asset plan on hold. I want to be very clear about that. You should not quit your active employment and expect to continue to build up your wealth pyramid. Why are you buying rentals? You need to build your cash machine. I'll call myself out. This is the first year I've ever paid taxes on time. I have been...
Yeah, but it's no different than me trying to have a CFT conversation with a 19-year-old.
Like I used to...
Not even ready for this, right?
I used to complain about my employer. That son of a bitch, he takes my taxes first. Like I would love for someone to take my taxes first and me not have to figure it out and tell the government what I owe them. And there's some big things like this wealth pyramid. I wasn't going to tell this story, but I'll tell this story. Like one of the guys in the group, when the economy it got a little rough Q4 last year, and his business started falling apart, he didn't have a solid wealth pyramid. He started having suicidal thoughts. So us at Coaches at Select, we understand we're doing important things. That's part of the reason we love it. But as far as stability in a cash machine and assets owned, this room is crushing it. I get frustrated on cash flow tactics calls sometimes because everybody's like, I'm not crushing it. And I'm like, you're at the party. I don't know how to explain this anymore. And so these guys are awesome. They're learning to create a cash machine. What we do is we get people who are at the party to stop pulling their punches, because traditional financial planning does not show you guys how to fully leverage everything you're doing. I want to help people fully leverage their cash machine. That's what I wake up in the morning to do. It just shows you what's been hiding in plain sight. Would anybody disagree with that statement? All we're trying to do is show you guys how to fully leverage what you've already worked for, the assets you've already had. Does anybody in the real economy actually use their own money to invest? Do hedge funds use their own money? Do publicly traded companies use their own money? When Dave Ramsey's telling people to use your own after-tax income to build wealth, do you think it'll work? No. I think the two critical skills, other than coordinating action and teaming with people, is you need to learn how to sell, you need to learn how to raise money. That's why we stress saving money. Here's another question. To play an infinite investing game, do you have to use your own after-tax dollars? You can. It won't go as fast, but just like every other wealth generator in the economy, you really don't need to use your own cash. That's why it requires a ton of education. The level of success that you achieve is 100% dependent on how well you're gonna team with others. Like Bobby was an Army football player, he actually got time. I rode the bench, but a few times in sports, I experienced a flow state. What Larry talked about, combat experience, a few times I experienced the flow state. And like I'm addicted to that feeling, but here's what you need to be in a flow state. Clear and specific goals, immediate feedback, and challenges that are outside your skill level. Like, I focus on these things. This is how I have an optimized daily experience where I get fulfilled and have accomplishments. So here's the requirements that we have found people need to have. So clear, specific goals, and it also encompasses purpose. You need to have a buying criteria. You need to know what you want. You need to come to us with a cash machine, and then we can teach you how to get access to capital. The bottom three, that's the education we focus around. Major, definite aim, tying everything you do with your purpose, finding a buying criteria of where you want to get into the game in real estate, and then teaching you how to get access to capital.